I want to take a quick look at Friday and how the trading actually having a losing day on Friday affected my trading on Thursday. So I hesitated to take a fill right here. Why? Well, when I went back and looked through my journal and wrote, um, I was concerned that we were going to have the opposite, kind of a drive higher. But key is my rule says that when I get into this zone, has a good rotation up. Middle to back is a high odds location, and then what I was looking for was some security that I wasn't going to have a losing day again. I'm up on the week, and even with Thursday's losing day, I'm up on the week. I've gone for weeks and weeks now with having winning weeks, and I don't want to have a losing week, which has nothing to do with my trading decisions. But when I look back at my journal afterwards, it must have been somewhere on my mind. So by the time I decided to enter an order at 1696, it had gone there twice already and stopped, and I didn't get the fill. Came close, just didn't get the fill. It fell off. Now, you'd also have seen me tweet that because we'd come so close here to getting filled, but with no long, which I would have, again, this was pre-market resistance, which then it broke through right before the open, which is now support. We didn't get to move in. And I was concerned that we'd come so close that we would flush through the second day. Again, that was a lingering memory of what happened the prior day, which is rare. I know that's rare, and I know that's rare from looking at my spreadsheets that I keep, which teach me and reinforce to me that it's rare for my zones to get flushed on the first touch, that I will normally get a rotation. So I look here, and the first time in, I don't take this trade. So now I've missed, and we get a beautiful rotation up. I've now missed 4 points of profit, okay? We do get the flush that I was concerned we were gonna have once we had this gap fill. And we come down through this zone, and here was the next issue. So we're getting close to the white zone, and the tick is actually getting pretty heavy through here. I don't take this first touch of this zone. I don't even have an order in. Okay, that would have been aggressive. I would have had to stop all the way back here. However, this first move in from middle to back is part of my trading rules. Again, I tweeted I'm looking for an extreme tick or a tick divergence, of which I got neither on my system. Some people did send me messages that they got a negative 1,000 tick. So here was the other error that I'd seen come up this particular day. I got tweets from clients of mine who said that they, instead of using a 2-point stop from the back of this zone, 2 to 3 points, which according to my data is what I need to be using. Each person needs to determine two things. First of all, what is the stop that the particular trade you're taking is in? And secondly, do you have a trading account that can tolerate the stop that's required? You have to have both for a trade to work for you. It does you no good to pick off an area where it'll be the low of the day or possible low of the day, and then have a stop so tight that you're just going to get stopped out. And what can happen very easily in a situation like this is you can take a long here and get stopped, a long here and get stopped, and a long here and get stopped. All of a sudden it adds up to a pretty good chunk of change, and then what happens is you just run out of energy. You're like, I can't take another stop, and you miss this move up. So I didn't place an order here, which was just simply not following my own trading rules. Okay, first time in, I didn't follow my own trading rules. I was hoping, and I was certainly willing and waiting to take a trade right here. I was very confident that I could set up both a swing trade and my usual 2-point trade out of there. And it didn't hit. I didn't get filled. And so I ended up with nothing. So that's 2, 4, 6 points that I do not have. Okay. As we're approaching 11 o'clock, by the way, as you will see, the reason why I am not crazy about trading this hour is because we come up in the zone and we did reject right here. The zone is valid. We had a rejection, but it was not a 2-point rejection. Again, we've started lunch right here. Okay, this is our lunchtime startup, and we've barely missed the white zone. Okay, again, the white zone acts like kryptonite. The closer you get to the white zone, the more likely it is that buyers, on top at least, will have more and more control. The further you get away, the less control buyers have. Just think of it as kryptonite. You're Superman. You're a super trader. The The closer you get, the less you want to be short close to this zone, certainly on the first touch. So I had no saving grace in ES on Friday, and I attribute that, after working my journal this weekend, to I was hesitant. I didn't want to get smoked. I didn't want to walk out with a losing day. When I look over here at NQ, on the other hand, my NQ chart provided me with plenty of trades. Right out of the open, the white zone gave a beautiful trade to the long side. This zone never set up to the short side for me. Didn't get a trade here. And then this is interesting here. This moved down into the white zone here. This is a point of difficulty. So it gave you a rotation up for 5 points. I didn't take the trade. Wish I had, didn't. Second time into the zone, we bounced out. You can either consider this the first or this the first. I consider them both valid trades. Just depends on how aggressive you want to be. Technically, this was the first. This is the first move back in after we rotated up out of the zone. So it's a point for, it depends on how aggressive you are and how you look at the trade, okay? But one area I did have a concern is, and one thing that's important is, you need rotation between zones, okay? If we just flush through the white zone, remember, the white zone acts like kryptonite, right? I don't want to be long on the bottom side of the white zone, and I don't want to be short coming in from the top side of the white zone. But and so that requires you to think, do I really want to take a long trade here? Well, no is the answer to that question. I don't, okay? And we got a beautiful rotation, and you just have to know when you're getting those big negative tick readings that when we get stretched like this, this entry has been solid. This is a double bottom from the prior day, and this was just a great place to take along, and this trade right here made my day. Both, I got my 5-point target, I left a trailer on, and between this trade and the other trade, it left me with a beautiful day. So, but that being said, my main money maker is in ES, at least for stock markets, and I traded it really poorly. So there's a couple of things in there. So people are always asking me, well, how do you come up with the zones, and how do the zones work? And the zones, having the zones is not the important part of trading. Okay, I can give this trade plan to 10 traders, tell them exactly how I'm going to trade it, and at least half of those traders will actually lose money on the trading plan. And there's a couple of reasons for that. First of all, I've done a ton of research on this. I've kept close, careful stats on what my results are with the zones internally. Okay, so when I take a trade, I can go back and look at tons of data and know this trade pays me, even if it doesn't pay me today, even if it's not this trade that pays me, over the course of 10 trades, I should get paid, and I can be confident in that. Number two thing, I know how hard I work at this. I'm not guessing, and I'm not looking at someone else's trade plan, and I'm not waiting for someone else to tell me. When you know that this is your own work and the result of your own work, it becomes much easier to make money on a consistent basis. The third part is I trust myself. Why do I trust myself? Because of what I did on Thursday. I'm not going to endanger my account, my equity, my trading future by taking any more than 2 stops in a row. Just not going to do it. Okay, and that's for any strategy that I run. If it's a swing strategy and I have 2 stops in a row, that's fine. I'll stop. I may even stop for the week on my swing trades if I'm not getting it. And then the other thing I know is I'm able to detect when the market has changed. Why? I watch it every day and I take notes. It's summertime. The market is trading kind of weird right now. Particularly Thursday was hard, but every day has been kind of hard. The rejections aren't out of the zones, aren't quick. We're getting a ton of this stuff where we just stay in the zone, stay in the zone. Getting rejections like this have been rare. I expect that to go away in September. But I can draw on all this, and then I do the homework with my spreadsheets, and I go back and I look through the various months, and I look and I go, what happened in this period of time? This period of time last year was slow. August was slow last year, and the trades required more patience, and that's the average summertime trade. So I have to lower my expectation, and I have to increase my patience a little bit when I'm doing that. all these things add up to becoming a better trader. And that's why I say, if you're reading trading books on actual technical trading, and you're spending more time on that than you are on yourself and on your trading journal and in taking careful statistics so that you can identify things like, what time of day do you trade better? Do you seem to have problems when you increase your trade size or decrease your trade size? One of the problems with decreasing trade size is traders will be compelled to increase the number of trades they make so they can make the same amount of money. Or they go the other way. I've lost money. I need to increase my trade size to cover the money I've lost. And so you're dealing from an idea of, I have to get out of this hole. Okay? There's a big difference between wanting to make a lot of money as a trader, which is totally fine, and needing to make a lot of money. Wanting to make a lot of money means I'm going to do all the things I need to do step by step to get the results out of the market. Needing means I'm going to sit there and look as hard as I can at the market and try to find a way to make this market pay me. And that will totally screw you. It'll totally screw your account, and you will be totally out of business. So, and that would suck, because you can make, I can assure you, anyone can make a lot of money in the market. It simply takes time to learn yourself and learn the market. But once you have a system, see if the system works. For example, stochastics, which I don't use at all, I think they suck. Okay, I think they work about 50% of the time and don't work 50% of the time. That's me. If you want to use them, go ahead. But know your history, and I don't think back testing helps, because all of this looks easy looking backwards, and I know I'm going over what I wanted to. I've already covered the bulk of, there's nothing more to go over on the charts. I've been pretty clear at this point. And so if y'all want to cut it from here, that's fine. What I'm going to go over is purely from a perspective of trading. If I'm trading and I need to know a couple of things. For example, I know my time of day. I know that I have almost a 30% higher odds of a losing trade in the afternoon than I do in the morning. How do I handle that? If I do take a trade in the afternoon, I lower my trade size. It's harder for me to hold a fully loaded long position if I'm taking a swing trade. How do I handle that? I reduce my trade size via scales, okay, and I leave a portion to capture the larger portion of the trade. But it's pretty rare for me, maybe 2 or 3 times, maybe a little bit more, maybe 5 or 6 times a year, where I can identify that we're about to get slammed or we're about to rocket ship. Occasionally I'll catch an open drive higher where we have a trend day up, and I'll catch those. Occasionally I'll catch a day, like for example the very end of the day last year, I believe it was in December, where everyone was sure we're going off the fiscal cliff, and the market fell. I don't even remember where we were trading, but it fell from like the final 15 minutes of the cash market till S&P closed. We fell almost 30 points if my memory serves. And I caught that. It was a huge home run for me, and I could kind of see it set up. And it fell so fast that I was actually dragging my stops down, and they just weren't getting hit. Okay, so I kind of fell into a home run. But if I sat there and I try to hit home runs all the time, I can't hold the trade size large enough to feel comfortable. And I inevitably, no matter how hard I plan to hold this trade, and no matter how secure I am that we're going to go from point A to point B, which I actually get right quite often, I screw up the trade. I can't take the heat on the bounce back. It becomes difficult because I am trading in such a leveraged manner. Okay, and so again, the trade plan is half of it, and I'd say once you have your trading methodology down, it's 25%. The rest of it is the mental preparation before market, taking the little breaks during the day to refresh your mind, and keeping the focus of what you're trying to attain both on a daily basis and on a larger goal, and learning to trust yourself as a trader. My name is Simon. If you would like to learn how to trade like a professional, if you want to learn the steps you have to take to get good and be good every day, feel free to contact me. My either Twitter, StockTwits. My email is tradeandperform@gmail.com, and I offer 3 one-on-one coaching sessions. It's $200. It's dirt cheap. Normally my rate is $125 an hour. And in those 3 sessions, I can get you headed in the right direction. It's a good deal. So at any rate, my goal is to help people out here, and I hope I've done that. I hope everyone's had a wonderful weekend, and I am looking forward to rocking this out this week. Have a good night, everyone.